So 4 p.m. and I landed in this coffee shop that's kind of at the back of a commercial strip. Really, really weird. Feels like a school. Look at that. Yeah, so I didn't record anything today. It's been a very work-packed day with a lot of calls and stuff. And a coaching session for a program I'm running with Mandy this morning. That was really cool. It's gonna be time for a technical lesson. Just before, I'm on a new street now I've never been to before, and this looks really lively. Take a look at that. This massive busy area, just go on and on and on. You could walk a long way there and you will still find restaurants and a lot of activities. So just back inside. Two things I want to talk about today. First of all, a trade setup, and second of all, it's going to be kind of example that someone sent me, which I kind of want to review. This is crazy, right? But alright. Now before that though, just thank you guys for the feedback, and I see that you want to see some more trades, which I'll be happy to share every time I come up with trades or every time I want to show you guys setups, because I know now you get value from it. Don't try to copy, that's not the point. But if you're getting value from it, then I'm happy to share for sure. So let's jump on the chart. In the previous video, I've been telling you guys I took a trade on Euro USD, and that was kind of in a coffee shop at the end of the afternoon. I was waiting for the candle to close, and I placed the order. The trade didn't get triggered as soon as that, but it took some time and then it was triggered. So a trade on Euro USD happened. This one is on a forward chart. So let me go back on the forward chart. And I've told you in the past video also I did that this was based on the 1.25 zone, a major zone in the market. If you go on a weekly chart, which is very easy to spot on and very simple, you will see that price has been bouncing many times at that zone in the past. Okay, it's kind of a previous support turning to potentially a resistance. This is not a place where we've been ranging to that zone. It's just a zone that's there as a potential place to take a trade, which I still trade, right? Because there's still zones. So what happened with this is that I'm always I won't trade on the weekly chart because for me that's way boring, and the trades will be very, very less frequent. So I'm willing to go on lower time frame, the daily chart, which does not produce that many trades at all, and then the forward chart and the 1 hour chart, which I've told you guys is something I spend more time on now, the 1 hour chart, because I see there's more and more trades set up. But on the forward chart, they don't always form on a time frame you want, so you have to be willing to stay there a little bit and look at the higher time frame after that, which is going to help you usually place more trades and have better setup, and they're all reliable pretty much. The same routine goes. I'm always looking for the same thing, the engulfing candle at the top or the low of the Bollinger Band. That's what we had on the chart right here, and basically entry below the low, stop loss above the high. This one I placed it a little bit above. I placed it at 1.24185 just to make sure it would be a little bit above the candlestick, which I tend to do most of the time. It's not a rule I have, but it's never at the top of the candlestick straight, because it gets stopped out too often. So I prefer to put it a little bit above or a little bit below, depending on what you buy or sell, to make sure I have some room. And if price were to go back and kind of hit that high, I will be still in the trade, which is something I've seen a lot happen before. Now, reward to risk, I put a take profit at 3 to 1 and one at 20 to 1 as always. So the one at 20 to 1 has been triggered, okay, because that happened pretty fast, and the one at 3 to 1 is still there. So I'm still in the trade kind of partially with half on the trade, and that's how I like to do it. I've told you guys like many times why I do this and everything, so I won't expand here, but it's the way I've been choosing to do for those trades. Now, based on this, the other thing I want to show you guys is someone who sent me charts on Facebook. That person, in a very nice French vocabulary, sent me 2 charts, and it was basically asking if those are valid trade with the Bollinger Band and the engulfing candle, which both kind of were not, and that's why I want to cover them here to make sure you don't make those mistakes. First one is basically not an engulfing. Okay, so he sent me this with this chart right here, asking if this candle is in an engulfing candle. Now, based on your definition of engulfing candle, some people say, let's say, so if it's going to be a bearish candlestick, it has to close below the low, which is what I look for pretty much. Or some people will say it has to close below the open of the previous candlestick. Now, to me, that's fine, but less reliable. So I would not consider this an engulfing candle. Okay, although some people do, but I don't. Now, but this one here really didn't close below the open or below the low. So that, for me, that's not an engulfing candle. Okay, that's not really valid. And the other thing, which I think I'll show you with the other example, is going to be easier, is, well, this is the second example, LDJPY on the 60-minute chart. This is a very good engulfing candle. This is what I would look at as a valid candle and something I would consider trading for sure. Because basically what it says is that you've had some sort of move up and then price went below and closed below the low of the candlestick. So the lows are always like major points pretty much, and the candlestick closed below the low. So that's kind of major, that's kind of important. Okay? And I don't necessarily look at the wick that much, but here I'll basically place an order below the low, stop loss above the high. If you want to risk, I think this is 3-1, I don't see it on the chart that he sent me, but I think that's pretty much the trade. Now, what I will say with this is that a very good setup, very nice trade, except that we don't really know the context of that trade. The context is really important. What happens before the trade is as important as your setup, as like what you place your trade on. And what I mean by this is that I always take my trades at major levels, major support resistance areas, major zones, and this, I'm not sure if it's at a zone. Now on the chart here you don't see because like it's not enough data and stuff. But let's see if we go back on AOGPY on TradingView. I have this open here. Okay, that trade really unfolded well. That was a profitable trade, in fact very profitable. But don't forget that these trades can be winning trade, but also bad trade at the same time. And that's what we have to differentiate. What I told this guy is that this is a lower probability trade. We're not really at any support or resistance area. Like if I look on the weekly chart, we are pretty much at the support zone. Now we could say this right here was a resistance zone, which yes it was, that makes sense. But in my opinion, we're kind of too far to place a sell trade there and expect price to go downward. Okay, so that's my take on it. We're not at the zone, hence why I would call this a profitable trade for this time, but a lower probability trade overall, which means if you take it over time and more and more and more, which I've done a lot in the past, I've done that mistake a lot, you will probably see a not profitable edge and something that won't make money over time, which you want to be very careful with, right? So I've come to a point where I realize how important the zones are, and I try to take trades based on those. The setup comes after, but nothing else when I look at the chart. Zones first, and then look at for setup at those zones, because this is what is giving me my edge. Might not be the same for you. Some people trade only setups, and they have like crazy specific rules for how they trade it, when they trade it, what setup is valid, what is not valid, and that works for them. But for me, it's a different game, and it's a different perspective. Hope that makes sense. So you guys have 3 trades right now. It's like 3 for 1. One trade that I showed you guys in USD, 2 trades from someone who sent me his charts, and all that makes sense. Now don't send me a chart like I won't do this every time. Try to become independent, and the moment you become independent as a trader, the moment you start to see success and you can control your growth. You don't have to wait for other people to tell you what to do, but you can do it all on your own and you feel great at the end of the day, and that's always the goal. Thanks guys for watching. I'm gonna actually go at the night market downstairs, like just downstairs the corner, try to grab some food and see what I can find there. Don't forget to subscribe if it's not done yet, and I'll catch you guys tomorrow for a brand new video. Ciao.